Today we're looking at a fraud scheme that investigators say stole more than $55 million. It begins with a phone call, someone claiming to be a federal agent. They say your bank account has been connected to a criminal investigation, and unless you move your money immediately, it could be seized. For most people, a call like that would be terrifying, and according to investigators, calls like this helped scammers steal more than $55 million. So how does something like this happen? How do criminals convince ordinary people to hand over their life savings, sometimes in the form of gold bars? And once that money is gone, how does it disappear so completely? To understand that, we need to look at how the scheme actually worked. Authorities say the scam usually started the same way: a phone call. The person on the other end sounded professional. They introduced themselves as a government official. Sometimes they claimed to work for federal law enforcement. Other times they said they represented a financial regulator. The message was always urgent. Your identity has been linked to criminal activity. Your bank account may be compromised. And if you don't act quickly, your assets could be frozen. For many victims, the story sounded believable because the callers often knew personal details, names, addresses, sometimes even banking information. Once the victim believed the call might be real, the scammers increased the pressure. They warned that the situation was extremely serious. Some victims were told they might face legal consequences. Others were told criminals had already infiltrated their bank accounts. And then the scammers offered what sounded like a solution, a way to protect the victim's money. But the solution required immediate action. No delays, no time to verify the story. And that urgency is one of the most powerful tools scammers use. Because when people feel rushed and afraid, they are far less likely to question what they are being told. Victims were then instructed to move their money into assets that could be controlled by the scammers. Sometimes that meant withdrawing large amounts of cash. In other cases, victims were told to convert their savings into cryptocurrency. But in many cases, the scammers pushed victims towards something unusual: gold. Victims were told to purchase gold bars. The explanation was simple. Gold, they were told, would be safer than leaving money in a compromised bank account. Once the gold was purchased, the scammers arranged for couriers to collect it. And that's when the victim's savings effectively disappeared. According to investigators, the operation didn't stop with the theft. The stolen assets still had to be laundered, meaning they had to be converted into something that no longer looked connected to the crime. In this case, authorities believe some of the gold was brought to jewelry businesses. There, the gold could be melted down, reshaped, and turned into jewelry. Once gold has been melted and recast, tracing its origin becomes extremely difficult. What started as a victim's retirement savings can quickly become just another necklace or ring sitting in a display case. Eventually, investigators began noticing patterns. Multiple victims described nearly identical phone calls, the same claims, the same instructions, the same pressure tactics. Authorities started tracking transactions connected to the victims, and that investigation eventually led police to businesses suspected of being involved in the laundering process. Search warrants were executed, evidence was collected, and investigators began piecing together how the network operated. The numbers involved were staggering. In one county alone, investigators reported losses of more than $7 million. Across Texas, authorities estimate the total losses reached $55 million. Many of the victims were elderly, people who had spent decades saving money, and in some cases, those savings disappeared in a matter of days. Cases like this are becoming increasingly common. Fraud operations today are often organized, structured, and surprisingly sophisticated. They use scripts, call centers, laundering networks, and psychological manipulation. The criminals behind these operations understand something very important about human behavior. When people believe they are speaking to authority, they are much less likely to question what they are told. Fraud doesn't succeed because people are careless. It succeeds because the systems we rely on are built on trust. We trust banks, institutions, and the people who claim to represent them. But scams like this exploit that trust, and that's what makes them so dangerous. Fraud schemes like this continue to evolve, which is why understanding how they work